SpaceX is no longer just a rocket company. It's becoming one of the most influential technology and infrastructure giants on the planet. And soon, possibly beyond the planet. Today, we're breaking down SpaceX's real financials, its projected future growth, and the increasingly serious possibility of a historic merger with Tesla, a move that could reshape the global AI, energy, and transportation landscape. SpaceX's newly released SON filing gives us the clearest look ever at the company's financial engine. In 2025, SpaceX generated $18.7 billion in revenue, growing more than 33% year over year. But despite the massive top line, the company posted a $4.9 billion net loss, driven largely by heavy investment in Starship development and the absorption of XAI into its operations. The real moneymaker? Starlink. Starlink alone produced $11.4 billion in 2025, about 61% of total revenue, and delivered $4.4 billion in operating income, making it the only segment with large-scale profitability. Launch services contributed another $4 billion, while the AI division, including XAI, added $3.2 billion in revenue but remains deeply unprofitable. Analysts are projecting explosive growth. Goldman Sachs estimates that SpaceX's AI division could grow from $3.2 billion to $322 billion by 2030, a 100x increase. Morgan Stanley forecasts total SpaceX revenue could reach $330 billion by 2030 and potentially $3.4 trillion annually by 2040, driven by orbital AI compute, Starlink mobile, and next-generation space infrastructure. If these projections materialize, SpaceX could become one of the most valuable companies in human history, not because of rockets, but because of AI, data, and global connectivity. Rumors of a Tesla-SpaceX merger have intensified following new language in SpaceX's amended SON, warning investors that the company may issue a significant amount of equity for future transactions, widely interpreted as a signal toward a potential Tesla combination. Prediction markets now show rising odds of a merger announcement by 2027. Why a merger could make sense? Tesla dominates terrestrial AI, autonomous vehicles, robotics, and energy storage. SpaceX dominates orbital infrastructure, Starlink, space-based compute, and global communications. And together, they could form a vertically integrated AI ecosystem spanning Earth and space. But there are major risks. A combined Tesla-SpaceX entity would carry a valuation near $3.4 trillion, yet operate at a combined GAAP loss, given Tesla's declining net income and SpaceX's heavy R&D spending. Analysts warn that Tesla shareholders could face dilution and be pulled into SpaceX's more speculative financial profile. A merger could create the world's first Earth-to-orbit AI supercompany, controlling EVs, robotics, satellites, rockets, and global connectivity under one umbrella. It would accelerate Musk's vision of a unified technological ecosystem capable of supporting both terrestrial automation and multiplanetary expansion, but it would also be the largest, most complex merger in corporate history, and one that could either unlock unprecedented value or concentrate unprecedented risk. SpaceX is already redefining the economics of space, AI, and global communications. Whether it remains independent or merges with Tesla, one thing is clear: the company is building the infrastructure for humanity's next era. Subscribe for more deep-dive financial breakdowns and future tech analysis.